What's up, guys? Going into another review of this morning's session. This video is a little bit longer, but I promise there's some good stuff here. So this morning I was working on drills, and what I mean by drills is pretty much finding things that I use in price and kind of testing them out and getting more comfortable with using them. So in the usually during the morning session, traditionally I will only search for setups between 950 and 1010 because that's the macro. But since I'm just beginning and I'm not even trading with real money yet, I need to get as many reps in as I can. And the reason for that is because when you're trading, you feel this sense of uncertainty all the time. Even if you know, even if you understand the logic and you have a model and you have a good understanding of where price is going to go and why, and you have some pretty good bias, meaning you have a good feeling that you know where price is going to go. An inexperienced trader like myself, or a novice trader like myself, I'm not comfortable pushing the buttons. I feel like there's something, even with fake money, I feel like there's something on the line. And so I was watching a video from ICT yesterday. I learned everything from ICT, and he was saying you need to go in there and trade more frequently, even if it's not about winning or losing. It's about desensitizing yourself to taking trades, because you want to be in this state where when you push the button, you have no emotional connection to your entry. You have no emotional connection to the trade. You want to turn yourself into some kind of robot. When it comes to trading, at least, you want to have no emotional rise or drop while executing a trade. And so I'm taking that advice, and probably for the next week or two I'm going to be trading a little bit more frequently, just trying to desensitize myself. I'm still looking for that setup at 950 through 1010, and you'll see me execute that later on, but you'll also see me take much more reckless trades. So here, I just want to note, this trade is right at the opening bell, which usually I don't usually trade, but I'm going to start trading just to get the reps in. But here I see obvious liquidity on the buy side, which is the take profit, and my stop loss is down below at a valid level. It's at below the fair value gap, that white space that you see there. But the reason why I closed the position there is because of this choppiness that you see. You see those big candles kind of laying right next to each other. That is something I'm not comfortable yet when price is choppy like that. You see how it looks like a white picket fence? And so it's great to look back on the trades that you do, because you'll see right here I make a huge mistake. Even though I'm drilling, I make a mistake even in my drill. So I outline this fair value gap here, which ends up not being a fair value gap. But you don't even notice it because you're so locked in on looking at what price is doing. And I have these monitors to the right of me. I'm looking at price, on different screens, and right there I think that's a fair value gap, but it ends up closing in. And so for me, it's okay, here's another opportunity for me to drill. So I take this trade that is actually, see how it fills that gap that I thought was going to be there, but I didn't even notice it. I was just oh, it's just still there. So I drilled off this fair value gap, which was a mistake. And you'll see that it was just bad for my drill. So even though I was just practicing today, I was practicing wrong. So I want to make, so this just points out to me that okay, you need to wait for the candles to fully close and then make your drawings and then make your box. Because here I'm oh, well, here's another opportunity to drill. Let me get ready to get into a trade. That's what's going through my mind right now. And I want you to remember that take profit level and that buy side liquidity on the 15-minute chart where it's nice and flat. That was my original target at opening bell. It was smooth. It formed a fair value gap, that white space just right above the red space, and I was on side, but because I was trying to drill and on top of the choppiness that price was showing me, I just got out of the trade, which I think, tomorrow I'm just gonna let the trade do its thing and just see it play out. And this is why you drill, right? So you want to drill so that you gain confidence in your model. It's not enough just knowing the model. You can know it, but if you don't apply it over and over again and see it over and over again and desensitize yourself to the possibility of experiencing drawdown. There's a helicopter. I don't know if you guys can hear that. There's always helicopters running around here. So here I'm taking a trade, which is bad. This is just bad here. There's no fair value gap there. Like that level doesn't even exist, and I'm so locked in that I don't even notice that fair value gap just doesn't even exist. And I'm using it for a drill, but it's not the right one to be using. So where I had my original stop loss was actually a valid place to have your stop loss. I would have never been stopped out this whole entire time, and it would have went straight to the buy side liquidity that I had marked previously. But because, and this is something you'll be dealing with as you start trading, you doubt yourself, especially in these choppy conditions here. So you see how price before that looks like a wooden fence. That's pure retracement. That's price isn't really going anywhere, so it kind of just has you feeling uneasy. Now here, I feel like I kind of noticed that this wasn't a fair value gap around this time. This is the problem with doing audio recordings later, is you're not really, I almost moved my stop loss lower, but it doesn't matter. I didn't move it. It doesn't matter. For me, it's just oh, clearly you did something wrong, and that's why the trade didn't pan out, because it's not because of the model I used. It's not because the model I use doesn't work. It's because I clearly did it wrong. You can see that fair value gap, it's not even existent. I just formed it before the candle closed, and I didn't really correct it in time. And so here I'm just chilling. I think by this time I kind of noticed something's up with that fair value gap. There is one there, but it's not as big as it's drawn to. So here I'm just watching price. See, I'm just trying to take as many trades that kind of make sense, but not really. Because remember, I'm hunting for a setup at 950 through 1010. So right now, I'm just really trying to desensitize myself. I'm pretty sure I get stopped out on this one too. And I'm just trying to just get in there, and that way that the more down the road, I don't want to have any feelings when I press the button. Because those feelings of uncertainty that I was fighting and caused me to close out on the first contract, even though I was right, it's because I don't have enough confidence in what I'm doing yet, because I haven't been doing it long enough. This is something that everyone's gonna experience, unless you're a freak and you're just naturally have no emotions. So I get stopped out there, and at this point I'm just for me it's just I'm drilling, it's whatever, but then I'm man, this fair value gap is kind of jacked up. I should probably change it. I'm gonna finally make the change to the small little fair value gap that's there. There was a gap there, I just drew it wrong. So again, I get into another one. This is already way too many trades for me, than I would typically take. And then the original target that I had is like, I don't even think, no, it's not even that high. I think it gets it like right there. Like that's the original target that I had. And I went for the next highest target. But I think at this time, I can't really tell while doing the audio recording. I think by this time, it's getting around 950 through 1010. So I'm looking for my actual setup, the one that I want to be using, like not every morning, but when a setup, like when a setup presents itself, I want to be executing at 950 through 1010, like seriously, you know, at least for right now. And maybe later I'll start trading like right at the opening bell all the way through the morning session, but that's going to take a little bit more experience for sure and more practice. But yeah, this morning was just drills. Like I just wanted to get in there and press the button so I can start, you know, like training my brain into understanding that there cannot be an emotional connection to these trades, because the more emotional connection that you have there, I think I got out of that trade because I was now looking for a short. Because think about it, retail traders or street money, they're looking at price going up, and so trend followers, people who use trend, what's the name? Trend indicators. Right now, all they see is it's going up, so they're gonna buy. And all these long orders sitting below, you see those smooth lows right there, right? So that white space that kind of overlaps the red space, a lot of buy orders are there. So if I'm an algorithm and I want to unseat people from their positions, meaning I want to take their stop, and people who have long orders since the morning, they're profitable right now. They're green. They're up a lot. So if I'm an algorithm that wants to take out those people who are going to make a lot of money if price still keeps going up, what am I going to do? Well, I'm going to go and unseat them. I'm going to go hunt their stops. Stop hunt. So you see it just took out the buy side. So those 3 green bars right there, that was where my original target was, and it hits it. So that's how, like, that's why doing these drills is going to help you. Like, if you see it over and over again, you're going to understand that the choppiness doesn't always mean that price is going to go against you. It just means price is in a holding pattern right now, and it's not really, like, it doesn't have to move everywhere all at once, you know? There's you have to let time do its thing and let price deliver over the basis of a certain amount of time. But here at 950, I'm like, okay, let's get real logical about this. I've done enough trades, I've done enough drill for this morning session. I've taken, at this point, probably 4 trades. I think I'm about break even, or a little bit below break even at this point. But that's not my concern. My concern is desensitizing myself with the trade. That's the goal here. But at this time, I see an obvious setup right here. 950, a lot of people are making money on the buy side. If I'm gonna go up, I wanna unseat these people from their positions before I go any higher, if I'm priced. Because retail traders, they see this and they say, wow, it's going to be a bullish day. We opened real green, it's gonna keep on going up. Okay, that's dumb. That's dumb money. That's just a dumb mindset. And I think those 4 levels there, that's what sucks about doing this audio recording, is I can't look at all my charts at the same time. I think that that level there is a 1 hour sell side imbalance, buy side inefficiency, or maybe a 4 hour. It's a higher time frame influence on price. So, but whether it be the 4 hour or the 4 hour or the 1 hour, there's something there that I felt like price was going to send price down, and we kind of get those reactions. The bodies aren't able to get up that level or past that level. So I see like this rejection happening at 950. I believe it's 950 at this time. And then you see where I went over that button? I tried to click it way earlier than that. So I got this terrible fill on this trade. I was trying to click it and it wouldn't pop up for some reason. Maybe I was definitely hitting the button. I think it was just being slow, because I always have a bunch of tabs open on my laptop, so it can be slow. So here, I'm looking at some relative equal lows right there. Also, it's right above the first presented fair value gap, and it's during my macro time, 9:50 to 10:10. So at this time, the price engine is going to be looking for, like, it's going to be delivering to liquidity. Where is there orders that I can take out? So then I didn't put my stop loss yet. Put it up here. I believe it was like on a 15-minute candle or somewhere. I kept it pretty far away. I really should have just used the fair value gap, because here we have our that long white candle that moves away from the fair value gap. We have our what's it called? Oh yeah, I was gonna add another order here, but I was like, nah, let me stop, because that's what my teacher does. He like adds orders. He like scales in as price is delivering where he wants it to deliver. And right here, I already see it's clear. Like yeah, like this is what, like this 9:50 to 10:10 time. This macro is gonna hunt, and it's gonna hunt for dumb money who's trying to follow the trends. So it's not going to be like, oh, I'm just going to go higher and let you make all this money. Not today. Some days it will do that. And that's why you just got to have a good feel for the market and understand what the market really is. And it's an algorithm. And understanding how to take out dumb money, street money. You want to be in the smart money mindset. So this one was kind of less of a drill and more of me getting a rep at the setup that I want to be trading every morning. Well, not every morning, obviously, because not every morning is a trading day. Not every macro presents its opportunity for you to make obvious trades like this. Like, this is what you want to. This is like a bread and butter trade right here. Like, this is something that I can see every day, collect data on, and it's very obvious for me. Like, and I just started. I really just started paper trading when I started my YouTube. I mean, you can look at the date. It's like, I think maybe 3 weeks now. 3 weeks old now. Not even a month. And I mean, if I'm building this confidence now, just imagine where I'm going to be in a year. And no doubt that there's going to be a bunch of setbacks. But does anything really not have any setbacks to it? Like, just how it is. And this here, so I'm sticking with this trade, like, no matter what. Like, this is like my serious trade in this session. This is kind of what I'm trying to see. I'm trying to measure out the levels. I think I do get some drawdown. I'm not sure. I don't really remember. But yeah, right here I'm feeling pretty confident. Everything kind of just makes sense for me. Like, this trade just clicked. I did get a terrible fill on it. I should have got in on price when it was a little bit higher. I would have made a little bit more of a profit, but yeah, because I was trying to press the sell button, but it like wouldn't pop up the market, the order menu. But eventually I got in before it ran away too much. Still not really. It was a terrible fill. So here I'm just watching price staying well below the level. Bodies aren't even trying to get into it. Then I think I measure out something else. Oh, the video cuts off here, and then it goes into, it goes into the next video. There'll be a little transition there. And So here price is consolidating. You see that it's just going sideways, literally sideways. So smart money right now is putting in their orders, giving themselves time to, put in some orders. And here it's taking out, people who got in the trade a little bit too late, who didn't have a good stop, didn't have good logic behind their stop losses. Here it's like sweeping out anyone who could be, they're on the right side, but doesn't want, everybody to be making, a bunch of money here. So then here, let's see what price does here. I forget. So right now, like not having confidence in your model and, not seeing this enough would, there it is. So you get the longest wick there. See the longest wick? And bodies are forming around the middle of this wick. So when bodies are forming around the middle of a wick there, so first of all, that's balanced price. I know, because ICT taught me, that balanced price is gonna move price away from it. And when you see bodies building around the consequent encroachment, let's just say midpoint of that long wick there, it is almost, it's pretty certain that price is gonna run aggressively into the direction that it was originally moving to before. Now, what happens next is pretty interesting. So I hit my take profit, and then almost immediately after it takes that take profit, it like launches back up. Because when people see this aggressive move down, a lot of people got in short there. They put in an order to go short. And in some area of this fair value gap, people were like, wow, price has a lot of momentum to go short. I don't want to miss it. Let me get on board right now. And it's really interesting that so the people who already had orders down there hit their target. And then the people who put orders in late just got stopped out. So it did one quick bang, here you go, and then bang the other way, fuck you, you're not in this. And that's what it does. And then later on, I think it'll show, I didn't want to make the video too long, also had to go to work, so I cut the video. But later on it keeps on going lower because people will continue to be like, oh, okay, well, price is gonna go higher now. This is a pretty bullish day, which I believe it did end up being an overall decent green day. I think it kind of stayed stagnant, but it was overall, I think it closed higher than the open. Yeah, it closed higher or just about the same as the open, so technically it was a green day. But not really though, not like it wasn't super green day. But a lot of people would say, like a lot of retail traders would be like, okay, well, it's done its damage, now it's going to continue to go higher. And actually the opposite occurred later in the day, or at least for the morning session. It sold off, had a pretty nice delivery to buy side. And so even below my target, it takes out more sell side liquidity, as you can see there. I didn't film the whole thing, but it does drop a substantial amount. I believe it trades at least to like one of the new day opening gap lows, and that's why I have those levels there, because price just it trades to like an algorithm, like it should. Yeah, coming up on the last minute of the video. I know I talked a lot, but definitely a good video here, a good day, a great like practice day for sure. Just desensitizing myself to trades, getting myself to that point where I don't feel anything during a trade, pretty much like you want to be like a robot, because you're trading against an algorithm. That's the only way you'll be able to be profitable, is if you take your emotions out of the equation and just go off of logic and your strategies and be patient. That's the only way. But yeah, that's pretty much it for this video. Hope you guys liked it. It's pretty chill. Pretty chill morning. And yeah, I'm about to hop back in tomorrow. Tomorrow should be wild. Pre-CPI, so see you guys then. Peace.